to everyone for giving your time and attention. Most valuable asset you have is your time. And you don't have to be in this webinar right now. There are several things going on today. Later on, the Prime Minister would be speaking. Justice League would be launching on HBO. So thanks for your time and attention. I just want to apologize for Mr. Robley. He's having some technical difficulties. So he'll be joining the call during the presentation. So I'll just share my screen. So today's topic is from side hustle to business. Well, Kendall and myself, they would have done the introductions. We are an accounting firm. We are a 15-member firm with both offices in Trinidad, likewise in Tobago. And what we specialize is moving businesses from small to medium and medium to large. And our services includes accounting, advisory, as well as information technology in terms of accounting software, point of sales, and likewise taxation. Likewise, we are part of Anderson Global, which is formerly Arthur Anderson. And the reason for that being is for the services that we would have rendered to Trinidad and Tobago over the past two and a half years. Likewise, GMMB would have done some training series with GMMB, doing similar to what we are doing here today, advising small SMEs so that they could move out from, again, moving from a side hustle into businesses. So what we'll be dealing with today mainly is business registration and utilizing your business operations with your financial statements. So there are several types of business registrations. You have sole trader, limited liability, partnerships, and non-profit organizations. With sole trader, that's the most people, especially in Trinidad and Tobago, when they now looking to move from having their business on the side to looking to register, they'll do it as a sole trader. There are some benefits and some disadvantages to that. Benefits of being a sole trader, it's easy. It's easy to get registration. The disadvantage to that is there's no separate legal entity between yourself and your business. So should anything falter with your business, you take a loan from the bank, they could seize not just the business assets, but your personal assets as well. The next form of registration is limited liability company. And if you're looking at having a large-scale enterprise in which you may not just want to be here in Tobago or in Trinidad, but you may want to further scale into being up the islands or being international, we'll form a limited liability company where you could have several shareholders. And the advantages, one of the main advantages is a separate legal entity between yourself and your business. So if anything should happen to your business, especially where creditors are concerned, they could only seize the assets that are in your business and they can't come for your personal assets. So that's one of the main advantages. Likewise, they are a bigger tax shield versus the sole trader, because limited liability companies, they tend to give more employment to the population. So governments, not just in Trinidad and Tobago, but worldwide, they tend to offer more tax deductions to limited liability companies. Partnership is a form of sole trader where you have two or more persons looking to start a business. Again, there's no separate legal entity. And should anything happen to the business, they could come for your personal assets. So most people, if you're not starting business by themselves, they may go the partnership route. Again, it's easy to form. So yeah, most people tend to do that if they don't go in by themselves. In terms of another form of registration is a non-profit entity. In terms if you're looking to form a charity, and there are some benefits to being a charity in which that you pay no taxes versus the other forms of registration. You have to pay taxes. So what type of business you should register? And that is up to you. It's based on your vision for what your business want to be. You might want to grow your business to 20 million. You might just be satisfied in making an extra 100,000, 200,000 for the year. So again, it depends on what your vision is for your business. A lot of business owners, especially small business owners, they tend to manage their business through their bank account. But your bank account, it doesn't give you the full financial picture of your business. And if you're looking to go to seek a loan, the bank would ask you for your financial statements. And why would the bank ask you for your financial statements if they know what they have your banking information, your bank statements, and so forth? And the reason for that being your bank statements only give about 5 to 10% the overall view of your business operation, while having the financial statement that will give them the full picture of how your business would operate. Again, forms of business: sole trader, partnership, limited liability companies, non-profits. You have users of financial information, internal users, so like the owners of the business, the directors of the business, teams, your employees of the business. Then you have external users, people like the banks, the tax authorities, investors. They use the financial statements to make business decisions, business activities. That would include financing activities. Should you want to take a loan from the bank, investing activities? Should you want to invest in another business or invest in assets, and then operating activities, which is the day-to-day managing of the business. And then communicating with users. Now, in terms of financial statements, most people will know the profit and loss statements and the balance sheet, and they think, hey, that's the end to the financial statement. But a financial statement is made up of 5 elements: the income statement, the balance sheet, the statement of changes in equity, the statement of cash flows, and the other elements, which is the notes to the financial statements. Again, the forms of business. Again, sole trader is normally operated by one person. It's easy to register, establish, owner control, and there are some, we'll call it, tax advantages. Limited liability. Again, it's easy to transfer shares. So if you're building your business, again, your vision, you might say, I want to turn my side hustle into having a real business, but in years to come, I want to pass on that business onto my children. And you could easily do that through transferring of shares. Again, too, if you're looking to raise funds and to have investors in a business, again, it's based on what is your vision for your enterprise. If you're looking at thinking big, you go the limited liability route. Again, separate legal entity, there's no personal liabilities, and there's a better tax shield for limited liability company. Partnerships, just like the sole trader, easy to establish. Other benefit, everything doesn't depend on you. You have several partners that are in place, and I could tell of myself, anytime I get into business, I look to get into business with like-minded business partners so that, you know, you could share the risk. Sometimes you'll have down days and they could pick you up. And when they have down days, you could pick them up. So risk management, and then again, putting together skills where you might be weak in, your partner might have strength, and vice versa. Non-profits, again, it's a form of giving back to society, leaving your island, your country better than you found it. It could be just like a limited liability company, challenging to get started. You might need help from a professional in doing the registration process. Again, just like a limited liability, there's no personal liabilities and the tax advantages. Non-profits, they don't pay any taxes. Am I going too fast or am I going too slow? Because I'm not able to see the comments.
It's fine.
Okay, cool. Yeah, again, users of your financial information. It's one thing managing a business at the side. When you then look to make it into a hustle at the side, when you look to make it a business, there are several users to your financial information, and you want to leverage your business operation to fund your expansion, because you might have one bakery and you want to turn it into two, into three. You have a bakery down on the west, you have a bakery up on the north side, you have a bakery up in Tobago East, and you might want to start one in Trinidad. So internal users of financial information will be management, your marketing personnel. You might have an accounting team. Likewise, human resource, if you're looking to recruit workers and so forth. External users, again, investors, should you want to, again, look to expand your business outside of Trinidad and Tobago, or even in Tobago. I know the THE, they have the venture capital arm of the THE, in which worthwhile enterprises on the island, they can have the venture capital company invest in your business. And to do that, you'll go the route of a limited liability company. Again, users of your financial statements would be the tax authorities, which would be the Board of Inland Revenue in Trinidad and Tobago here. In a period of time, once the law is passed, would be the Trinidad and Tobago Revenue Authority. Creditors, so people like your suppliers, your banks, your credit unions, people who may give you loans, they will ask you for your financial statements so that they can know the strength, the financial health of your business. And then regulatory agencies, if you want to go on the Trinidad Stock Exchange, National Insurance Board, they may ask you for your financial statement information. Yeah, human resource. So employees, or you might have a worthwhile and a hard-working team, and you might, human resource and accounts might come together and can you really give workers a raise, especially in these times, in the pandemic, and based on your financial information, based on your financial statements, you are then informed whether now is the appropriate time to make such decisions. In terms of management, you want to know how profitable your business is. Again, a lot of SME business owners, they run the business off of the bank account. So if the bank account within a certain level, they may not know what is the profitability of the business. And being a accountant, you have some clients call you in to prepare the financial statements, and by the time you're done, put together all the income, the expenses, the fixed assets, you reconcile the bank and so forth. They have been making losses. They know they're making losses because they would have been pumping in, but to see how much they have been losing, they can't see. So preparing financial statements, it gives you an overall view of the financial health of your business. And then finance, the accounting department, they could then analyze that financial statement and then decide that, hey, you might have equipment that you want to purchase. Now might be an appropriate time to purchase, or we hold off when collections might come in this cycle and so forth. So the accounting department and finance department, they all use the financial statements to make informed decisions. Again, investors, if you go into the venture capital institutions of the THE, they want to see your financial statements probably for the past 3 to 5 years to see the overall trajectory and growth of your assets based on your balance sheet, which we'll go through later on in the presentation, to see if that, hey, this is a company that is worth investing in. And then to the tax authorities would want to ensure they see a financial statement to ensure that you're paying the correct amount of taxation to them. Likewise, creditors, you might ask you, if you're bringing on a new creditor, you might ask you that, hey, in order for you to give you credit or give you a loan to your business, you want to know how your business is performing. Like, again, if Caribbean Airlines, they might want to buy a new fleet for their planes, and they might go to FCB. FCB might want to see what is the financial performance of Caribbean Airlines over the past 3 to 5 years in order to grant that loan. Again, all businesses, they are involved in 3 main activities: financing, investing, and operating activities. And you have an accounting system that helps keep track of all those activities. Most businesses, when they start off, they might just keep the receipts and so forth. But it's good to use accounting software so that you know exactly what is going on in your business at any given point in time. Yeah, in terms of financing activities, you could finance your business in 2 ways, especially if you're dealing with the limited liability company. You can finance it either by borrowing money, and when you borrow money, that is called liabilities on your aspect of things. To the credit union or to the bank, that is an asset because you're giving money to them. And to whom you pay those liabilities would be your creditors. And that we call that your account payables. In terms of issuing shares, when you issue shares, you're investing in the equity of your business. So you might give away 20%. Just recently this week, Term Finance would have given away 20% of the company to FCB. And that is through an issue of shares of stock, where investor would pay you for, because you've been running your business satisfactory to their standards, you'll want to invest in your business and help you expand your business. So again, what type of business you want to invest if you're moving from a side hustle into a business is based on what your vision is for your business. Invest in activities. So again, you want to grow your asset base. And one of the most important elements of the financial statements is your balance sheet, which tells you the overall health of your business in terms of your assets and your liabilities. So assets are what you own in your business. If you're in construction, you have trucks and so forth, furnitures, computers, those fixed assets, those are your assets in your business. So you might have $1 million in the bank. You might use that $1 million to further buy some more assets, which could then generate future revenue and further grow your business. And with inventory, if you're buying stuff to sell, or you're buying stuff to make a product to then go and sell, that is inventory. Then operating activities, which is the managing of your business. Revenue is based on, inflow sales coming into your business. So you offer a service. You might be a lawyer, accountant, or architect. You render your skills to make money. Inventory, again, you buy a product or service and then use that to sell back to your client base, to your clients, to your customers, and which you then earn revenue. Accounts receivables is if you give credit sales, so you might give your client either 15 to 30 days credits, so they pay you on the 15-day or the 30-day. In your balance sheet, your account receivable. So if you give them a 30-day credit of your architectural services, the bill would have been like 20,000. You have 20,000 lying as an asset, so that's money, future money to come in, as well as expenses. So one person's income is another person's expense. So to your supplier, that would be an asset, but when you put it in your financial statement, that would be an expense and a liability. So marketing, paying your workers, paying your taxation, those are expenses. Liabilities are, you might have a loan in the bank to pay, you might have debts, creditors to pay off. Those are liabilities that would sit in the financial statements. Sit in the balance sheet. Companies prepare financial statements to make up of the income statement, which is another word for the profit and loss, balance sheet, or statement of comprehensive income. Statement of changes in equity, which shows the ownership of the business, and then statement of cash flows. And this is a simple income statement where you have sales. So say for example, you might be a furniture store, say like Quartz, and your sales generated year to date for last year would have been 600,000, and your cost of sales, meaning the cost to bring the furniture to your place of operations, it would have been 45,000. So your gross profit would have been 555,000. But then you have operating expenses, which will make up of advertising, and you might have some sales agents, so you might have to pay some commissions. And then you have administrative expenses, people that work in the office, work in marketing, work in HR and so forth. So you have salaries and wages to pay, which will be of 90,000. Then you have office expenses. You might buy drinks and so forth for your workers and so forth. Over the period of that year, from January to December last year, that would have come up to 55,000. Overall for the admin expense would be 145,000. And then you have finance expenses, which is like bank charges. So if you have point of sale, the charges that come out of your account on an annual basis. And then interest expense if you have a loan and you're paying that loan on a monthly basis, that would account for interest expense. And all of these go into your profit and loss or your income statement. So your total operating expenses would have been 340,900. Net profit would be 214,100. So that's most people would be familiar with this, the profit and loss statement. Yeah, so then the statement of equity, which is the ownership of the business. So what the stated capital is when you would have put into the business, and then your net profit, your net profit from as of January 1st, 2020 would have been 50,000, but then this net profit for 2020 is 214,100. You add that from the previous years, you get 264,100, and you add the share capital, the owners the owners' equity into the business is 274,100. So for 2019 would have been that, closing off of 2020. Again, seeing that you had a profitable year, it increased the statement of equity, which is the business is going in the upward trend. Which is I would have previously discussed there. And based on this, if you have a limited liability company, you could use this to then pay out dividends. That's how FCB and so forth, after they could pay out dividends to their shareholders, is again based on the net profit and keeping that inside the financial statements. So again, this here is the balance sheet. So balance sheet is made up of assets, we'll call it equity and liabilities. Your property, plant and equipment, 300,000. So you have a building, you have vehicles and so forth. Your trade receivables, that means the clients are owing you money. So you have trade receivables of 250,000. The government owes you a VAT refund. And in your checking accounts, you have 73,000 inside your checking accounts. So your total assets would be 636,000, and assets are equal to equity and liabilities. So your stated capital based on the statement of equity is 10,000 share capital. Your accumulated profits from last year and the previous years would be 264,100. You have a loan with JMB, and the current balance of the loan is 146,670. The non-current liabilities, what that simply means, you have current liabilities and non-current liabilities. Current liabilities, those are liabilities that has to be paid within the next 12 months. Non-current liabilities are liabilities that has to be paid over the 12 months, so beyond the 12 months. So the current liabilities is 100,000. You have trade payables, the public suppliers and so forth at 30,000. You have an income tax payable, probably your corporation tax for the year. And then you have a VAT payable for the current VAT period of 23,000. You add up your equities, your non-current liabilities and the current liabilities, and that must equal to your asset base. This is the technical aspect of things, but what is a good thing for you as a business owner is knowing that your asset base is continually growing. So if your asset base is currently 638,000, next year you might want it to be 1 million. The following year after that, once it's going in an upward trend, you know your business is growing. Yeah, I would have explained this in the previous slide. Yeah, this is your balance sheet, and this is really, if you're dealing with external users of your financial information, accountant, a banker, we really look at the balance sheet. That tells us the strength of your business, because you could probably have 1 million in sales, but you don't have any real assets to your business. The banks might really want to lend you a loan because they might just have a really good year. And then a statement of cash flow. This is based on the flowing of your cash in and out of your business. So again, the operating expenses, receipts from your customers would have been an inflow of 350,000, and you would have paid your suppliers and your employees for the year. That would have accounted to 90,000. So inflows from your operating activities would be, the nets would be 260, but then you would have invested in getting some fixed assets, some plant and equipment, probably a truck if you're into the construction business, and you would have invested 250,000 into that. Or you may have looked to get a loan from the bank, and then you're financing activities that would have accounted for 246,670. So the overall net cash flow from your business for the year would be 256,670, and based what is in the bank, you would have started at the beginning of the period, ending of the period would have been what is left in the bank, the 73,000. And this, the inflows from operation, investing, and financing activities, this is what makes up the statement of cash flow. So again, the other elements of the financial statements, you have your income, your profit and loss, your balance sheet, statement of equity, and your statement of cash flow. What then makes up the rest is the notes to your financial statements. So last year we would have had the pandemic with COVID. So on many financial statements, you will have a note saying due to COVID, business activities would have been hampered. So the financial statement, businesses would have been closed for probably 3 years, 3 months in the year, depending if you are essential business. So that is a critical note to the financial statements. And again, to auditors and so forth, bankers, accountants, we tend to go into the notes of the financial statements. So say, for example, your courts and we have had a fire in your business, you put that in the notes of your financial statement. Any extraordinary events that occurs in your business during the period of time, you would tend to put that into the notes to your financial statements. And the breakdown of the numbers in the balance sheet as well as in the profit and loss statement, what would make up those numbers. In terms of management reports, you as a business owner, you might come to myself, the accountant, and we will prepare monthly management reports, because the difference between small businesses and medium businesses and large businesses is having systems and policies and procedures in place. And large businesses, they tend to check their financial statements. Some even do it on a daily basis. If not on a daily basis, they will do it on a weekly basis, and on a weekly basis, a fortnightly, but certainly on a monthly basis. Some SMEs, they tend to want to check their financial statements on an annual basis, but then it's too late. As I tend to tell clients, you can't have proper tax planning or tax management after the fact. And hence, large businesses, they tend to monitor their financial situations on a weekly and a daily basis so that they can make adjustments and make better informed decisions based on the data. So if, hey, when I would need to purchase this asset, again, your financial statements would help in that decision, because, hey, we have some income coming in from these receivables. We could then make it, and then we have this VAT refund coming that is sitting on the balance sheet there from the government. So the management reports, they give that data based on the financial statements. Again, uncertain events like COVID and so forth, beyond the numbers. Again, they will clarify the financial statements, so numbers in the balance sheet as well as numbers in the profit and loss. You could go into detail. There's only so much things you could say with the numbers in the balance sheet and the profit and loss. The notes, the financials, the notes could then go into detail what make up those numbers and give additional detail. And then essential understanding the financial positions. Those of you who may be in finance, when the bank sees the financial statements, they will run certain ratios based on your balance sheet on your profit and loss to see if you have liquidity, how liquid your business is, your current ratio and so forth, in terms of your ability to pay a loan. And if you have a lot of assets to collateralize a loan, especially if you're a new business and you may not have that track record. And what you need, banks, if banks will ask you for having audited financial statements, what that simply means, you may hire someone like my firm to do the financial statements, and we could prepare it, but you might have some business owners might tell their accountants to do things in a particular way. So banks, the tax authorities, Auditors are just there to verify that the financial statements are true and fair, and what is in the financial statements are actually there. So that is what the auditor would then base his report on. So just like you have the THE, the Auditor General will base on the financial statements, hey, this is what the financial performance, is it a true and fair view of the operations of the business? So that's why the banks will ask for an audited report to ensure that what you state is actual, because they are then using that financial statement to then give you a loan. That brings us to the end of the presentation.